Hello there. Hello there. This is James, and welcome to the latest episode of the Market Bites webinar series, which I'm doing, obviously. And today's little episode, or little webinar, is going to be about Introduction to Market Sentiment Part 2. Last week, I obviously did part 1, but part 2 today, I'm going to delve a little bit deeper into the commitment of traders report and how you could potentially use this to understand market sentiment, etc. Still going to give it a couple of minutes for anybody else who may turn up. So let's give it a minute or so, and then I will get started. I'll turn my light on as well. Okay, let's get started anyway. Let me share my screen. So, like I said, today's episode, it's about Introduction to Market Sentiment Part 2. Last week's episode, we started to delve in a little bit about what market sentiment is. But today, what I want to do, because I want to do it in little bite-sized pieces. I don't want to overflow everybody with information which you can't possibly take in. I want you to be able to slowly digest it and understand it. If we go too much, it might become a bit overwhelming. So this is why we're going to be doing it in parts. Like I say, today, I want to focus just on the commitment of traders report and how a lot of people don't actually really look at it. I mean, it's completely out there. It's free, it's available to everybody. But because it's not an instant market mover, nobody tends to pay attention to it or use it or digest the information. But anyway, before we get into all that and we get started, don't forget these little videos or these little webinars, okay, are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, starting off, first of all, a little introduction to myself for those who don't know me. Well, the first time watchers. I've been in the financial services industry for over 20 years. Over 20 years. I actually got started when I was 18. And I started off as a IFA in the UK, where I specialized in mortgages and commercial financing. Don't ask me about mortgages. I hate doing mortgages. I entered the trading arena, though, in 2006. And this is where I started trading gold options, not binary, proper options, through the Buy Gold and Commodities Exchange. Now, I worked for several very well-known brokers throughout my career, retail brokers that is, as both a portfolio manager and as an educator, which I've practically been doing now for the last 10 years. I'm a well-known public speaker, and I've spoken at several major financial events all around the world. I'm certainly well-traveled, that's for sure. And I'm also a published writer. I've been had several articles and analysis published in several publications. Now, one thing that everybody needs to know about me, or if they don't know me, will get to know the fact is that I'm a massive gold lover. I am a gold bug because it was the first thing I ever traded. So in many ways, it is indeed my first love. And if you don't like gold, unfortunately, you're going to, get sick of me talking about it. But anyway, today's, like I say, it's part 2 of market sentiment. And today I want to focus on the commitment of traders report. Now, the Commitment of Traders report, or COT report, is a weekly publication by the Commodities Futures Trading Commission, CFTC. Now, this provides insights into the market sentiment by detailing the positions of different types of traders in the futures market. Now, like I say, this is not, when it's released, it's not like the NFP, it's not like CPI, it's not like, PPI or anything like that. It doesn't spark the market when it's released. But this report is still incredibly crucial for traders and analysts who want to gauge the balance of market positioning, it's easy for me to say, and anticipate potential price movements in the future. Now, it is published every Friday around 3:30 p.m. Eastern Time, okay, with data from the previous Tuesday. Now, this is what it does. It breaks down the holdings of future market participants in different categories, and there's 3 main categories, and there's 2 in particular which we need to focus upon. 2 in particular, okay? Commercial traders, non-commercial traders, and non-reportable traders. And like I say, the main 2 we focus on is commercial traders and non-commercial traders. Now, why is the reason for this? And I'll tell you this now. Commercial traders, they're hedgers. They're institutions, they're corporations. Okay? These use futures to hedge against price fluctuations in the actual commodity they deal with. So basically, if I put it in maybe a more of a like a basic explanation, if I was a manufacturer of, say, for example, I don't know, metal fences or metal wardrobes. No such thing. Metal bookcases. Okay, got lost. Wardrobes. What's a metal wardrobe? Metal bookcases. Okay, so I needed to buy steel for the product I make. To protect myself against fluctuating physical prices of that said commodity, I would place a trade to hedge myself, to protect myself. So commercial traders are hedging, they're protecting themselves because they actually use the product or the asset in question for their business. So basically, they're trading as an insurance policy. And then you have the other one we need to pay attention to. And that is non-commercial traders. Now, these individuals or these companies, these institutions, they don't actually use the asset for part of their business. They're not manufacturers. Okay, they're not like this. No, instead, what they do is they speculate on future price movements. Their whole goal of trading is to make a profit in the direction that asset goes, if they get it right. So these non-commercial are likes of hedge funds, fund managers, and very large financial institutions who make money by speculating on price fluctuations. So one's for insurance, one is for profit. Those are the two different types you need to bear in mind with. And then you have non-reportable traders. These are small speculators, retail traders, and they're very relatively small. So, we don't need to really pay attention to them. What we need to pay attention to, commercial traders and non-commercial traders. Now, why is it important? Okay, because like I always said, it's released every Friday. It doesn't move the market once it's released, but why is it still important? Well, these reports reflects the sentiment of key market participants, how people are feeling, what's their expectation, where their positions are at, how many positions they're doing. It also helps identify potential market reversals at the same time when extreme positioning occurs. And I'll explain a little bit more about that in a bit. And is also very useful for confirming or questioning existing uptrend, downtrend. So it's a good way of also backing up the current trend you're watching, or if you believe an asset's on a trend. So it's good for confirmation as well. Now, how to read it? Now, this is this is the thing. How do you read it? Now, what you do is you calculate the net long positions, so net positions someone's buying, or the short positions with each trading category. So if you see a growing net long position among speculators, remember non-commercial, this may indicate a bullish sentiment. Whereas an increase in net short or net selling positions from speculators may suggest a bearish sentiment. Now, extreme positioning, i.e., for example, highest net long or short in months, often precedes to trend reversals, which does make sense if you think about it. If you've been selling, eventually you're going to need somebody to buy. So that's important to understand. Now, like non-commercial or large speculators, these big institutions, okay, are usually trend followers. So they go with the trend. Oh, I just lost my light. Never mind. Whereas this is important. So let me go to this point again because I got distracted by my light. My apologies. So non-commercial speculators, they tend to go with the trend because, again, they're trying to make profit on the price movements and the fluctuations. Non-commercial, or commercial, non-speculators, commercial, they will go the opposite. Why? Because, like I say, they're hedging themselves. It's an insurance policy for them. So they go in two different directions. If the price trend upwards, but large speculators start reducing their long positions, this could signal a weakening momentum. If commercials traders, the hedgers, are heavily buying while the speculators are selling, a trend reversal may be near. Let's have a quick look at the report. Now, like I say, it's out there. You can find it. Totally free. Totally available to anybody who wants to read it. The website, okay, obviously the Commodities Future Trading Commission is www.cftc.gov. So it's totally free. You can go to the website and get it. Then what you do, you scroll down the page till you come to current legacy reports. And we've got a number of options to look at. Really, which the one you want to do, especially if you're dealing with currencies, is go to the Chicago Mercantile Exchange. Don't do the long format because you'll see the pages in a minute why you want to do. Instead, you do the short format. So you pull the short format up. And then this is what you get. Basically, you'll get pages and pages of this sort of data. Okay, pages of it. Okay, and you've got cattle, milk, you name any type of commodity, any type of currency, Japanese yen, British pound, etc., etc., etc. Okay? But this is what it looks like. When you choose the asset you want to study, you want to look at, this is what you look at. So as you can see straight away, we have non-commercial and commercial. So we have speculators and we have hedgers. Okay? We can see the total number of positions the speculator done is long, and the total number of positions they're shorting. Same with commercial. You can see the total number of what they're longing and the total number of what they're shorting. At the same time, you've seen changes from the previous report. So here on this one, for example, you can see the speculators increased slightly their long positions, but they decreased their short positions. Commercial, the hedgers, they increased their long positions only by 17,000, but they increased their short positions by a fair bit. So this is what we need to focus on, these numbers here. Now think about, why would they do that? The speculators increased their longs, reduced their shorts. So they think it's going up. The commercial, they didn't do an awful lot to their decreased, to their long positions, but they increased their shorts to protect themselves. So again, straight away, we can have a quick look at these numbers and we can ascertain that potentially the sentiment for the euro is bullish, because we can see the attitude of both the speculators and the hedgers. Now, again, like I say, we often use this in a way of ascertaining a trend confirmation. Like I say, if large speculators are increasing longs and the price is rising, the trade may continue. If commercials are increasing their shorts in an uptrend, then the trend may continue, but it's also a caution to be warranted, because eventually you're going to need buyers again. Commercial traders often are right at turning points. If commercials are heavily long and speculators are extremely short, you can potentially expect a possible reversal. So this is why it's also at the same time important to keep a record of it, so you can start seeing the change of it as well. Now, you can use this sort of analysis, obviously, data with price action. You can use technical indicators like RSI to confirm or back up what you think, and moving averages, strengthen trade decisions. You can, because I'm always one of the believers that you don't rely on one indicator or one tool. You try and use several to ascertain maybe a possible direction in the market. So for example, if gold prices are rising by large speculators, let me start that sentence again. If gold prices are rising, but large speculators are cutting positions, the rally may be running out of steam. So again, this is what we need to keep an eye on and monitor, because it makes sense. If they start slowing down, that means the trend is going to start to disappear as well, potentially. Now, obviously, there is limitations, like there is with any type of form of information you use in trading. As always is, there's always limitations. Now, don't forget, first of all, of course, let's state the obvious. It's lagging, okay? Because the data is released on a Friday, but reflects the positions several days before. So it's not what's happening on the day. Okay, so obviously he's lagging. So that's the first thing. Again, what I tend to say for people who read the COT report are more for long-term position traders tend to analyze this information. okay, because it's lagging. It's a case of building up the information for you to try and make a decision in the future for what you potentially think may happen. And like I say, it's not, nobody potentially trades just using the COT. Doesn't make sense using one thing, so you use it with several other indicators, and I stress fundamental analysis as well. And like I say, it does take a bit of time getting used to reading it. I obviously showed you the data you need to take into consideration. But again, you have to get used to reading it because it's not the most easiest data to absorb. But once you get into the habit of just, if you trade a particular asset, you get in a habit of checking that asset and monitoring the long shorts for speculators, long shorts for commercial, and the changes, then you maybe start to be able to see a pattern and keep yourself up to date with what's going on. In conclusion, I'm a big fan of this report because I am more of a fundamental-based trader anyway, so it does go with my sort of the way I view the market. It can be extremely powerful tool, especially to understand market sentiment, how the market is feeling, because at the end of the day, the market's all about how many bulls do we have in the market and how many bears do we have in the market and who outnumbers who. It's a good way of understanding it. At the same time, it's a really good idea, good report to confirm trends if you want to confirm an uptrend on a particular asset, and potentially spot an asset if something is being oversold, in particular overbought, and eventually you're going to run out of sellers and you're going to run out of buyers, and it's going to have to reverse. And like I say, if you combine that with certain technical indicators like the RSI, which of course obviously shows overbought, oversold levels, and moving averages obviously, and the fundamentals, then it can make a real big difference in helping you potentially make a good trading decision. Any questions at all? Anyone? Like I say, this is only part 2. I've got part 3 I will do soon as well, because like I say, I want to take my time on this subject. Any questions at all? Anybody want to ask me anything? Or say hello even? You say hello if you like. Or let me know your thoughts. Share your opinions, obviously. Let me know what you think. Let me know your opinion. Oh, I've got a question coming. Was one of my regulars who often follow and come and chat to me. Sorry. How are you doing, buddy? It's good to see you. Hope you're well. Let's wait for this question. It's a big, long question. Gold. Let's be honest. We all love to discuss it. What do you think about it finally hitting $3,000 mark? Goldman Sachs gave it a $3,300 mark till the end of the year. However, it's a bit low compared to the way gold is moving lately. Having 3 months of all-time highs since the beginning of the year, do you think a big setback is coming? And if so, will it be recent, like on today's federal funds rates, expected to stay the same, or will it cut? Or will they cut? Okay, there's 2 questions there. Did the US dollar market had a bad week a bad week or so also for the cut? Is it possible to surprise us with a hike, with gold pullback to be later, not recent, due to the current increase of uncertainty? Great question. And there's a couple of questions in there. Brilliant. First of all, let's start off with gold, because we always talk about gold on our little webinars here. Yeah, and we do, let's be honest, we do love discussing it. I was so excited on Friday when it hit $3,000. I was watching it intently. Honestly, I couldn't focus on anything else. And when it hit it, again, I remember the day It broke the $1,000 mark back in 2008. I remember the day it broke $2,000 level back in 2023. And obviously, I remember last Friday extremely well. It is really exciting. I mean, it's the pace of the rally is interesting. It's the real pace of the rally, because none of us expected it to go that quick. Because not only did it break 3,000 on Friday, but yesterday again we hit a new high. And I think today we've hit another new high as well on gold. So it's the rally which is exciting, the pace of it. Now, will this rally continue? I mean, Goldman Sachs reckons 3,300. UBS reckons 3,200. Bank of America, if I read correctly, they go for about 3,200. Look, it's the pace. Eventually, it's got to run out of steam a little bit, and we've got to have a bit of a bout of profit taking at some point. We had a bit of that on Friday. We will get a bit of a bout of that. Now, will it continue up? Nobody knows for certain, because otherwise trading would be that easy. It's not. So we don't know for certain. Nobody knows for certain. But if we continue on potentially with this trade war, and as more trade war develops, then obviously the safe haven element is going to come into play. At the same time, the safe haven element is also coming into play because of the fear of conflicts expanding in the Middle East, etc. as well. So that's also making gold shine. So it depends on those fundamental aspects. Are we going to carry that on? Now, obviously, the big issue here is with this as well is that Trump is going to slowly start getting pressure by some of the big CEOs. I think today he's got some CEOs coming, or the big wigs in the oil market are going to meet with him and tell him that these things are a bad idea. So if he starts changing tack and changing tactic, then we could potentially see gold start to weaken, because the fundamentals will then weaken. But I mean, I think it's the pace of this thing, pace of gold. Because if you really look at it, the big boost towards $3,000 all really started when Trump threatened 200% tariffs on EU wine, and that's what kickstarted the real big push to 3,000, and that still have that case of uncertainty. Answer your question about the Fed. A big event today is the Fed interest rate decision, of course, is a big thing. I think the expectation is for them not to cut rates. They'll keep it the same. They will stay at a 4.5 level. They'll sit on their hands, because they're ascertaining the effect of Trumponomics, as I call it. The fact that Trump is traded the way we trade globally. So they're handling that. Inflation as well, even though it was lower than the last reading, still 2.9% though. Or was it 2.8? I think it was 2.8%. Still above their 2% target. So they're going to hold steady. I think what's going to be more important, and what can affect gold and will affect the market potentially, is the press conference. What they say, what Jerome Powell says in the press conference. That's more important, because no doubt, in my mind's eye, he's going to talk about patience. We're going to have to be patient to take the information in before we decide to do anything. And as well as that, the market's going to be hoping that you will give a hint of how many potential rate cuts we may have this year. Okay, initially the market got disappointed, think it was only going to be 2. Now, with the state of growth slowing down, because they are likely to reduce their forecast for growth in the US as well. They're likely to do that in their press conference. They will likely talk about that. There is anticipation they may do 3, which will obviously jumpstart the economy. If you jumpstart the economy, that will give potentially the market a bit of a boost, a bit of optimism, which again will potentially affect gold prices and put, again, the fundamentals. He'll be ripped slightly risk off. But anyway, again, like I say, it all depends on this uncertainty, how long it carries on and what developments we have from that. But anyway, that's a great question, as always. It's like a novel, but it's a great question. Really, 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 really good question. Thank you. Any other questions at all? Anybody else would like to ask me anything? No? Nobody wants to say hello? Okie dokie. What does everybody think of the Commitment of Traders report? Oh, we've got a question here. Excellent. Thank you, James, for your insights. You're absolutely welcome, my friend. Thank you. Thank you for coming. Thank you for coming along and supporting. I really appreciate it. I really do. Every bit of support is really nice. So thank you for taking the time to come and watch and support me, mate. I appreciate that. I really do. Thank you. Oh, brilliant. Serene, you're a star, mate. You're a legend. I love you, buddy. He said that these webinars have been lovely. Thank you. So thank you again for your time and for answering. You're a legend, mate, yourself. Thank you so much. I really appreciate it. You've come to every single one as well. And I appreciate it, mate. I really do. It means I remember who I see and everybody like that and who asks questions. And it's nice because it's the whole point why we do these things, isn't it? Otherwise, I'll just do a video. But I like doing live stuff because I get to talk and chat and we get to share opinions, which is the best thing about it. It's the whole point about it. But you're an absolute legend. Can I ask a question? Open it to the floor. Is there any particular topic someone would like me to do in maybe the next one? Any particular topic? Do you have a subject you want to have a discussion about? I mean, I could do market sentiment part 3, but I thought we could maybe change it up a little bit and do something a bit different. Maybe market psychology, for example, which is really, really good. I think that's important. We could do it on market psychology. Gold. That's what Serene's asked for. Gold again. I tell you what. Here's a suggestion. Okay, here's an idea. Someone come up with an educational topic, and I promise I'll do a bit on gold. How's that? We'll do a little segment on gold as well. So we can do that. So everybody gets included. Wait for another question. I'm seeing it being typed. I would love to know how more about how the market actually works, not just see it as candles. That is a brilliant question. It is brilliant, actually. That is a brilliant question. And I think that's extremely important. Now, we could do something a bit more on that because you're right. We can't look at the market like candles. This is the whole point of the Commitment of Traders report because we're looking at numbers. We're looking at size of positions and direction. It's not candle form. Candles are really good for visualizing current movements, or what the market movements is good at that. But it doesn't tell you the inner workings of what is driving those candles to move in a way. So that's a good question. Let me have a think about that, how we could do that and how much in depth we can go. But I think that's a fantastic question and a fantastic suggestion because I think, though I do obviously do technical analysis as well, I think a lot of people's webinars and things like that, they tend to focus on technical analysis more, but I like to look at the basics and the real driving factors for what creates the market and what drives the market. But that's a really good idea. I like it. Okay, Serena, let me think about how to do that. And I'll have gold involved in that as well. as well. So we get a double. So let me have a think about how I can do that, and what we will cover on that. Any other questions at all? Or any other requests of potential subjects in the future? Okay. Not a problem. Don't forget, of course, I do a live show, market related, obviously. I do a live show every day, around about between obviously either sometimes 4, sometimes 5 o'clock, but I do schedule it a good hour to half hour before I go live. In these live shows, which are available on YouTube, Twitter, eventually be available on One Royals Facebook as well, and Instagram, but at the moment it's One Royals Official's YouTube channel and Twitter. And in these live broadcasts, again, I just talk about what's going on in the market at that particular moment in time. You know, what's moving it, what the story is, what the market's focusing on. Of course, later I'll be going on in just over an hour's time. I will be talking about, obviously, the market getting ready for the Fed and their interest rate decision and what the story is behind that. So feel free to come and join me with that as well. Anyway, all I will have to say is a big thank you to everybody for taking the time out to come support me, have a chat. And Serene, as always, buddy, great questions, a great suggestion as well. Really, really, really good, man. And I thank you. I appreciate that. And I thank you all the support from other people as well. I really do. I do appreciate it. Thank you. Don't forget, obviously, there was the risk warnings there, so make sure you read it and take it into account. On that note, if there is no further questions or anything else, it leaves me to say, don't forget, these little webinars, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your due diligence, and of course, I've got a question. Hang on a second before I finish. I just saw somebody typing. It was a bit, Thank you. Oh, no, thank you, buddy. Thank you. I thank you very much. Got to thank you. No, thank you. You've been awesome. Thank you so much for coming along and supporting. And I hope you found it useful, more importantly. Okay, anyway, let me do my send-off again. Okay, don't forget, these little videos and webinars are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.